Showtime. First of all, thank you very much for coming today. And I also want to thank Blake's for hosting us here and introduce a few people from Equinox. Ryan King, I think everybody knows. Tom Gallo, who's our exploration VP, who'll maybe dazzle us with some stuff on opportunities that we have in 2026. And I'm Ross Beaty, the chairman of Equinox Gold and the founder. I do this every year. This is my 8th time. We are 8 years old officially this month. And I try to give a report card. So a number of you have been to previous years. And this is sort of my little wave the flag, talk about the year before, and some ideas of what we're going to do in the year coming. Reflect on what we sought to achieve, what we actually achieved, and then produce a scorecard and a kind of report card for our plans for 2026. Obviously, we had a pretty good year. The whole market had a pretty good year. Anybody invested in the space has to have had a pretty good year, or they should be selling insurance. It's just one of those wonderful times that we live for when we go through these horrible purgatories of bear markets. So this is going to be an update on what's going on with Equinox. And obviously, I'm very, very long myself. Haven't sold a single share since I started the company in the end of 2017. And finally, it's been well rewarded with the recent little pop in our valuation. But our real mission here is the title, Delivering a Top Quartile Gold Producer. This is our new mission. Cautionary notes, you know all about those. Okay, so this is like the 8-year period. We started with no production, with just a big idea, big dream to build a senior gold producer. What does senior mean? It means like 1 million ounces and more. And there's a small subset of mining companies in that space. There's lots of mid-tiers, lots and lots of juniors. But the valuation goes to the big guys. The liquidity, the scale is valuable per se. And so that was our mission. How do you do it? And I'm not in I don't have the age of wanting to wait for the classic exploration develop. It takes years and years and years. So we kind of cheated and we went through the M&A route. First thing we did is we bought a mine in California called Mesquite. Then we bought Lea Gold. We built a mine in Brazil. We then built a mine in California, Castle Mountain Phase 1. Then we sold a couple of mines. We created a bunch of companies. Then we acquired Premier Gold Mines to get Greenstone. Then this past year, in the middle of the year, we acquired, or we combined really with Calibre. It was a merger of equals kind of idea, and we completed that in June. So it's been a busy 8 years. We've consolidated 4 operations. We've created 3 spin-out companies. Solaris Resources, big copper play in Ecuador, non-core for us. We were divested out of that. I-80 Gold, we got that when we got Premier, a spin-out that is now worth, $400 or $500 or $600 billion. And we are largely divested from that. And Versamet Royalties that we created 2 years ago and last year, that is now a $1 billion plus company, and we own about $140 million of those shares. So that is also non-core and ultimately will be divested and used to pay down our debt. So we've created those spin-out companies, and then we've built 5 mines. The big one, of course, was Greenstone, and more recently we have kind of sort of built Valentine, but the truth is it was a Calibre deal and a Marathon deal before that, and we inherited that with the combination of Equinox and Calibre. So on that production base, you can see 25,000 ounces at the end of year 1. That was from Mesquite, and then 200, 400, 600, and then we had a lull because we had a slowdown in. We sold a couple of mines, and we had a slowdown in Mexico at our Los Filos mine, and then we had this purgatory of like 2.5 years while we built Greenstone, where we didn't really want to buy anything new. We had a huge amount of financing to do to get Greenstone up and running. And then last year was our big year because Greenstone's down now. We're starting to get the benefit of that production, plus, of course, the other assets we got from the Calibre deal. And this is midway through, middle of analyst guidance for 2025. Unfortunately, we're not putting our guidance out until next week or potentially even late in the middle of February. So I was hoping to get it done by today, but we're not quite ready for that. So this is going to be analyst guidance, real production to the end of Q3, obviously, and then midpoint of guidance. And 2026, that's an approximation. That's after we sell Brazil, which we just announced in December, selling about 250,000 ounces. So we were really on the cusp of 1 million ounces, including Brazil. We're, 2025, including Los Filos, including Castle Mountain, including the Pan Mine that are not in these numbers. We're just nudging 1 million ounces. We lose 250 from Brazil, but then we're going to gain that right back with some growth that I'll tell you all about. So it's been a very dynamic 8 years, and I think we're just, I would say really it's like climbing a mountain, or maybe a plateau. You climb and you scrape and you fall a little bit, a few avalanches and landslides and things, but you get up to the top, you can see a long way, you're on the flat plateau, things look pretty good. That's where we are right now. We don't have any need for equity. We are reducing our debt. We're going to take a huge step in reducing the debt with our Brazil deal. So I would say right now, it's a pretty happy place that we are at, and I'm really happy to report that to you, many of you have been here at almost every single year when I do this. And I mean, the promises that we've made, I think, finally are panning out pretty well. So what does this create right now? Obviously, we have 2 Tier 1 mines now in Canada, Greenstone and Valentine. Just started Valentine in November or September, really. We're going to have a big year this year in Valentine. We're going to have a big Greenstone. We have significant material increase in production and cash flow from these larger, long life new mines. And the other thing we brought with the caliber deal, we got this, this tremendous engineer, builder, Darren Hall, as CEO. Darren really has ramped up our technical capacity, and he's really focusing on delivering on commitments. And if there's one thing that I would say I'm guilty of as the eternal optimist in the group, is pushing our operating team to be aggressive with guidance, aggressive with numbers. And the result of that was we never hit guidance. We just underperformed again and again relative to the optimistic guidance. Well, Darren's the opposite. He's the operator pessimist relative to the geologist optimist like me. And he is really good at delivering on guidance. And so we're really hoping Q3 and Q4 are going to be pretty good relative to guidance. That's Darren Hall at work. And I think our estimates for 2026 are pretty much in that same vein. So really happy to see that horsepower. And Darren's brought with him part of his caliber team, Daniela Dimitrov in Toronto here, who's going to be the Executive VP Strategy and People and all kinds of other stuff. And of course, Tom Gallo, who's going to head up our exploration team. Big horsepower adds, plus our big team in Vancouver that we're going to keep. And it's a really nice combination. 1 and 1 is truly 3. Our liquidity is incredible, averaging 19 million shares a day. And as you know, liquidity begets liquidity. It brings in new capital pools, and it's definitely was something that I was focused on right from the start, trying to build a company that's of institutional quality, that is easy to get into, easy to get out of, and builds that base as a go-to name in the gold space. That really was an objective of mine when we started, and I really think we've delivered that in 2025. And of course, now the re-rate that has been on the come for several years as we got bigger. As you all know, scale matters in this business. Scale matters more today than it ever did in my career. My career goes back a long way, and scale really matters today. So the bigger you are, the more ounces you produce, the better quality of ounces. So it's not just quantity, it's also quality. The stronger your team, the more you hit your guidance. Just look at the incredible performance of companies like Alamos, Lundin, Agnico Eagle. These are all companies that have hit that scale mark and have got shareholders to really enjoy their ability to produce results as per expectations. Well, I think we're there now, and we had a great year last year, especially post-merger, and now we have this great portfolio. And some of it we're optimizing. We sold our Pan Mine in Nevada for $115 million in the fall. We just announced Brazil deal for just over $1 billion in December. So that's rationalization, using that money to pay down our debt that we incurred to build Greenstone, particularly. So what we are today, we're 3 producing regions: Mexico, Nicaragua, North America. 3 big growth opportunities: Los Filos, Castle Mountain, and of course Valentine/Greenstone. Big reserve resource base, almost 40 million ounces, and annual production right now is going to be in that range post the Brazil sale. But then with us, we have 500,000 ounces on the come with development projects that I'm going to tell you all about. So I think, a really great story, focused on quality, better quality as we mature as a company. So our report card, here's what it was. Daniela, welcome. Daniela Dimitrov. So we said we were going to increase production, deliver operational stability. We've done that. Greenstone has been ramping up slowly. It is actually a slower than expected ramp up, but we're getting there every single month is improving. And we expect continued improvement through 2026. Valentine, production and ramp up is ahead of schedule. And we have stable operations in Brazil, Nicaragua, and Mesquite in California. We were going to advance our growth pipeline. Well, we've sure done that. Our big project in California, Castle Mountain, has got into this Fast 41 program, and we expect a record of decision late this year, late in 2026. And that'll add 200,000+ ounces when we get that built post our permitting completion. So that's targeted for December, and we're doing all kinds of advanced engineering work right now to make sure that we're able to hit the ground hard when we get the permit to start that operation, construction. Valentine Phase 2, once Valentine Phase 1 is completed in Q2 this year, we're going to right away get stuck into the expansion there based on the big resource space we have at Valentine and Newfoundland. Arizona, we can kind of take that out because even though we did that in 2025, as we'd promised we were going to, advancing to an underground mine there, that is going to go now to the buyer, CMOC, and they'll take that project on and develop it. That is, for me, a kind of a sad thing because I was in love with that underground sheet of mineralization that would keep that will keep that mine going for decades. But that's life. You have to get rid of some of your children a little bit, and that's one of the ones for me for sure that I have seller's remorse on. But we're doing good things with the cash we're getting, so that's the way it goes. And Los Filos, our problem child in Mexico, sitting on a world-class reserve base and resource base. We just have to get that settled with the local communities properly. We're taking our time to do it. We're certainly not rushing. We have 2 of the 3 local communities sorted out, and we're still working with a 3rd. I'm very hopeful that we'll have that completed in the near future, but I just can't give a specific date. But we are taking our time and creating the platform for a project that we'll be able to go for decades after this, as a very large gold mine in an area that's been mining for 20 years. So that's the Los Filos story. Quickly, we did a lot of that in 2025. While at the same time, we really are focusing on delevering, reducing our debt, improving our balance sheet. And again, we did some of that last year. We expect a huge amount to be done this year to really get us to a net zero debt position, hopefully by the end of this year. And exploration, lots and lots of reserves, replacement everywhere, and new reserves and resources. We have a embarrassment of riches on the exploration front, and we'll be continuing to drill about 250 or 300,000 meters in all of our programs this year on that. And of course, the other stuff that's important, it's not as much as profiled as production growth and operational numbers, but it's all this ESG stuff that you have to work on. You've got to look after your employees, the environment, the communities. But for Mexico, I think we've done a wonderful job of good community relations, and you can't win them all. I mean, sometimes you just have situations that are difficult, and that's what we're living with in Mexico. But we've done really well in Nicaragua, Brazil, everywhere else. And I particularly commend our teams at Greenstone for their work with the local First Nations, and at Valentine with all the community support we've got there. And of course, we're reporting on all of this. We have good reports on all of our ESG stuff, which you can read separately on our website. So we had a pretty good year. We hit pretty much every single target that we set. And we're starting this year really well. And of course, luckily, the market has really picked up on this. You can see here obviously it's a tale of 2 halves. Last year we had first half, we were pretty much flat. Why were we flat? We had a landslide in Brazil back in 2024. We were still cleaning up. That hurt our production base, decreased our ability to hit guidance. We had Greenstone, which was starting up fairly slowly, slower than we expected. And more than anything, when we announced the Calibre deal, there were a lot of naysayers. There were a lot of people who said, this isn't such a good thing for Equinox. Mines in Nicaragua and development project in Newfoundland. And we said, just wait. This is going to be good. And all of this noise was investors who said, well, I was a Calibre shareholder. I don't really like the combination. Or I was an Equinox shareholder. I don't really like the combination. Or I'll wait and see how it pans out. And so we completed it in June. Darren took over as CEO in early July, and we hit guidance in Q2, we hit guidance in Q3, and bang, you had this wonderful, wonderful explosion of value because we were really a coiled spring. We were ready to go. We just needed a couple of catalysts. We got them, and this is our performance. First half, second half, we outperformed compared to every other company, every index that you look at. So it was a very, very good second half and a tough first half. But of course, it didn't hurt that we had this great run in gold as well. So the question is, have we already, have we had the run? Is that it? Are we going to trade with everyone else? And I think the answer is probably not. We're still, if you look at a sort of a 4-year run, albeit this isn't quite fair because we started 2022 after we'd had another beautiful run when we finished the Leogold deal that didn't work out too well. So by the end of 2022, we were down significantly below this. But still, we're trading around the gold price. And, these are our peers or our target companies. And I do think they have run a lot more than we have. So there's plenty of room left to keep going as we develop our growth pipeline, as we continue to reduce debt, as we do the things I'll be talking about now. And this is one of the things. The first mission we had was to build a large company, and we targeted 1 million ounces. That was my definition of large. Multiple mines, multiple jurisdictions, good liquidity, all that stuff. That was the first goal, and I would say pretty much, tick. We've pretty well done that. But now it's a little different. Now it's called quality, and what we're trying to get to is in that Tier 1 portfolio, Tier 1 mining jurisdictions, Tier 1 deposits, Tier 1 resource bases, so we can have a long life future, low cash costs, all of those good things that companies like Agnico Eagle have and those other really well-performing peers. And so you can see in 2024, we had 378,000 ounces from Mexico, USA, and then a little bit more in 2025. Greenstone came along, and now we have a big year ahead of us, 700, 800, all in Tier 1 areas, and you could say Central North America, with all of our growth. All of that 500,000 ounces coming from these jurisdictions. And right now, primarily Canada. So Canada, 63% of our assets, USA 17%, Nicaragua 16%, and only 4% Mexico at the moment, although that hopefully will grow as we get Los Filos going again. Los Filos was running at a rate of about 180,000 ounces a year, and so we definitely want that production back. 70% of our production coming from 3 mines with an average of 13-year mine life, Tier 1 jurisdictions, great track record, new mines, all producing strong cash flows right now, big capital returns going back to delever, and ultimately returning some capital to shareholders. That's been my target since we started, and I really am feeling we're on the cusp of being able to do that right now. And as soon as we do that, I can sort of say, okay, base plan, tick, done. Now let's just build on what we have and make it better and better, and that's actually what we're doing right now. The main thing here is an ability to self-fund our growth. I always am comparing Equinox's growth with Pan American Silver that I founded a long time ago, back in 1994. Same thing. We scratched and clawed and built a whole pile of assets, and they were all second-tier or third-tier mines. And finally, we got to the point that we didn't have to raise equity anymore. And I don't think Pan American's raised equity for 15 years now. It's all funded its growth through cash flow. And so that's really the sacred, the kind of holy grail that I think you can do if you build companies like this. And I would say we are there now. We are there now. Greenstone. Here's Greenstone. It's built. It's producing below its expectations in terms of a year ago. It certainly will hit guidance almost certainly right now, but we've got room to go still, and we hope to hit that room in 2026 and continue to ramp it up through the year. Hopefully design capacity mid-2026. It's got a long life, big reserve base. This is what it looks like. This is the open pit here. So that's got a 13-year reserve right there. This is all the future. none of these resources are in mine life economics. So I can tell you, as long as gold prices maintain obviously higher than operating costs of running this whole belt past Greenstone to the west is, that's 20 meters of 18.5 grams per ton, the most western hole. That shear zone just keeps going. The deposit plunges down, so it'll be underground, but, good grade and long life, and this is the future just at Greenstone. If you look at the whole belt of Greenstone, this is the mine area right over here, this little area here. This is the old Longmac mine, the Magnet mine, the Tombill mine, the Bankfield mine. This is all ground we own. We're going to be starting to work on these areas. Farther along the Trans-Canada Highway here, you have Brookbank deposit, Beardmore, Sand River mine. This whole belt, this is the Greenstone belt. and that's where, these other mines follow along. Obviously, lots of high-grade gold from there. This is what Tom Gallo is going to be working hard on with his team this year, and hopefully we'll have another deposit there that we can either mine as a standalone or use as a kind of a hub and spoke model, feeding higher grade material into the Greenstone mill, so we can jack up production from Greenstone just on that basis, even more, even fairly soon. So that's the story at Greenstone. Now, Valentine is just this beautiful deposit in Newfoundland. I've been there 3 times now, and in the last year, and it's just in a great place. It's just in such a nice part of the world. Newfoundland's been good to us. The workers there are high quality. It's a brand new mine. It's running well. The ramp up was faster than expected. Darren Hall, I think, can take a huge amount of credit for that. So can Jason, who's the mine manager. The whole team, it just did a great job. So it's also got big reserves, long life. It's going to generate about 180,000 ounces a year in phase 1, which is 2.5 million tons per year. We're almost finished. We'll be hitting nameplate capacity by about Q2, sometime in Q2. Valentine also has amazing upside. It's like a string of pearls along the shear zone, not unlike Greenstone. It's kind of the same geology. And the big thing to profile there that's not in any reserves or production base is this brand new discovery here called the Frank zone, just along strike to the west of the main pit that's being mined right now, the Leprechaun pit and the Marathon pit to the north or to the east. And this is just, it's got some killer numbers, 172 meters of 2.4 grams. It's a very cool deposit, and this plus other areas that we're drilling along that shear zone and a parallel one will form the basis of going on to a phase 2 operation at Greenstone, which will add, which we're going to target at around 4.5 to 5 million tons a year, almost double what we're producing today. So again, we expect long life, low cost production from Valentine. It's up and running now. It's going to be a core asset of Equinox Gold for a very long time. So that's Valentine. That's going to add a good chunk of resource growth potential, production growth potential from phase 2. Then we have California. We have Castle Mountain, as I talked about earlier, about 220,000 ounces a year producing for 12 years. Big reserve base. Hopefully we'll have it fully permitted by the end of this year. And then we have Los Filos in Mexico, the one that I'm most excited about, because as a geologist, that has the monster reserve and resource base, provided that we get social license through this one community that we're talking to. I'm confident we'll get it, but we have to do it on our terms, and we simply cannot revert back to the old models of royalty payments. It was just prohibitively expensive. So exploration across the portfolio. Where's Tom? How much drilling are you doing this year, Tom? There you are, everywhere. And I always forget, we also have a big chunk of ground at Red Lake. We have another 2.5 million ounce deposit in Washington State called Golden Eagle that came from the Calibre deal. So we have lots and lots of opportunities here, and we're going to have some pretty sexy numbers coming out in 2026. I think I can predict with confidence. Okay, so that's the story of the company. It's a pretty happy story from my perspective. And what about gold? I mean, what a ridiculous year. I have the pleasure of maybe more lucky than good measure, but I was so confident in 2016 and 2017 when gold was $1,050. Gold hit $1,050 1050 in 2016 in January or February, I think. And then it had a nice little run, and it went to 1350. So by 2017, we decided to form Equinox, end of 2017. 3 companies came together. And it was really because I was like, okay, this is my last company in my career. I love gold. I love the metal. I love how relatively easy it is to build a gold mining company because there's so many gold mines in the world and you can do it through roll-up. So I knew that was the strategy, which worked pretty well. But it was also very bullish on gold. And if any of you remember, it's like a broken record. Every year I've been here, it's gold fundamentals are good. They're very good. And I was pretty much, proven right. Obviously, it's been proven right. But the surprise to me was the equities didn't catch up. That was the weird thing. So last year in January, I was going, yeah, okay, gold's run. It's had a pretty good run. And gold was whatever it was, January 2,700 or something like that. Pretty good run. Equities were flat. And that was even to the middle of this year. They were just, there was no money in the system. The generalists weren't there. The specialist funds were getting beat up with redemptions. They had been for years. So there was one or two things that was going to happen. Either the gold price was going to come down or the equity valuations were going to go up. You can't have that disconnect to last very long. And I said, the odds of gold going down are very, very low. The macro fundamentals are fabulous. And you've just got to have some adjustment to the equities. And so luckily that's actually happened. But why is gold having such a good time? It's obviously there's been this amazing central bank buying 1,000 tons a year now, not just in China, India, Poland right now is the biggest gold buyer last year, Kazakhstan, Lebanon, like everywhere. Even Tanzania is back in action. Tanzania, Zimbabwe, they're buying gold, storing it as a reserve base. They're just trying to have an alternative to the dollar. They're trying to diversify their holdings away from the dollar. The ability of the U.S. or the Europe to essentially seize offshore reserves held by Russia, for example, after the Russian invasion of Ukraine, that didn't hurt people wanting to shift into gold. A lot of other central banks are concerned about the trajectory of the U.S. dollar, the U.S. economy generally, the profligacy of the U.S. Budgetary situation, huge national debt, increasing incredibly. I mean, it just makes people nervous. So that's why they're buying more gold. They're buying gold in central banks. They're buying gold in retail, not only in China, but a lot in China. But also now we've had this big run in the ETF gold buying in late 2025, and that's been a huge push. Geopolitical turmoil, it helps. I've never been one for saying buy gold if you're worried about global trauma, because having been in this game for many decades, you see those sort of runs when there's a geopolitical thing, but it quickly ends and people buy gold and then they sell it. But this other stuff is far more fundamental. The idea of using gold for what it's been used for 5,000 years as money, as a reserve base, that is now kicking in a really big way. And by the way, you hardly ever hear gold analysts or gold observers talking about the supply side. How can you have a metal that's gone up from $1,000 an ounce to $4,000 an ounce and not have a supply reaction? But you haven't. Supply side is almost the same as it was in 2014. It's incredible. 2012. It's incredible. Now, 2025, I expect we're going to see a bit of a jump from mines and probably from scrap. There's going to be scrap that comes out of various places. So you're going to see a bit of a jump. But it's almost price inelastic. Why? Because you can't turn on gold mines quickly. Equinox has probably, proportionally about the best growth record in production of any company on the planet. But it's hard to build mines. It's hard to find them. It's hard to develop them. It's hard to finance them. It's hard to get social license. And when you do, that can change. Governments are constantly have their hands out. It's a tough game. So supply is constrained. And that's why these margins we're seeing now are really unprecedented. They're really fantastic for those in production. Okay, let's just take off a few things that I mean, this is like a broken record. This is essentially the same slide I had a year ago. U.S. inflation is likely to move higher. It is. But at the same time, the Fed's going to be easing because they're being told to by President Trump. And Yes, the rest of the world has, I think, relatively muted growth outlook with relatively low inflation, but at the same time, it's so much being driven by what happens in the U.S. And if they're easing and inflation is getting higher, you're going to see moving gold for sure. Interest rates, same thing. Further easing is probable. Good for gold on one hand. Interest rates are going to come down. On the other hand, bond prices are going to be in a bit of turmoil, I think, and that's going to also be good for gold. U.S. dollar should weaken more. Why won't it? What's going to stop the U.S. dollar from weakening? Good for gold. And investors are finally starting to buy gold. They are realizing they don't have gold in their portfolio. They're catching up. You've seen a lot of that in Toronto here in the last week, when a lot of generals have said we've missed a lot of this run. You've had some incredible performance by people who were long last year. We want to catch up, and they're starting to get into the game. These are the analyst predictions. You don't have to be a genius to think, well, these are the cleverest people in the space, the analysts who really know the business. They're bullish. We should be bullish. Of course, it's a contrarian's dream to have this sort of fact pattern. But even as a contrarian, as I've always been, I cannot find a serious bearish argument for gold right now. Hence, my conviction that we're going to have another pretty good year this year, and it's starting out well. I think it'll continue for quite a while. You know, gold is underowned. Last night, I was at a really nice dinner. CIBC puts on a mining dinner for the CEOs of the industry and occasional chairs. And Mike Henry was the speaker. Mike Henry is the CEO of BHP, the world's biggest mining company. He's a really good guy, and it was an excellent speech. He talked about his life and he talked about the company, but he ended the speech with recounting if I can get it right, Anita, you might correct me if I got this wrong, but I think he was talking about a conversation he had with a London-based fund manager, very large fund manager. And the manager said to him, did you know that well, first of all, he said, we're very worried about the US dollar. We're very worried about the US generally, what's happening in the US. And did you know there were $200 trillion invested by foreigners in US bonds, right? And $20 trillion invested by non-US investors, foreign investors, in US equities. 20 trillion and 200 trillion. Remember those numbers. Now, of course, a trillion ain't what it used to be. Yeah, but still, it's a lot of money. But the total gold space, the entire equity space, every single global gold company combined, 650 billion. It's a tenth of what one company in the US market cap is, NVIDIA. It's peanuts. So yes, this chart is central bank holdings, right? Foreign central banks holding more gold than treasuries. Fine. But this is possible too, right? This could happen too. We could get back to those years in the 70s and the 80s when a lot of central banks decided gold is a pretty good thing to have instead of dollars. 200 trillion? Those are just investors. Those aren't central banks. Those are investors. Some of that money moving into gold, into the equities, hang on to your hat, or even the metal. This is interesting too. The investment last year by Tether, by the crypto company Tether. You know, I just found that fascinating. They're starting to get into the game. They're starting to take big equity positions in some of the royalty companies. Don't be surprised if some of them take interest in actual mining companies to get their hands on the reserves and resources we have in the ground for future production. Massively unowned, underowned, pregnant for really a secular change, a secular movement of money from one asset category, let's just say general equities, into gold mining equities, or on the physical side, dollars or any other asset base into physical gold for the same reasons that China has been buying gold like crazy. Okay, so I'm very optimistic. Equities are, I think, this is our story. Higher gold prices obviously is going to cause our stock to go up. We're going to be deleveraging like crazy in 2026. That's not going to hurt. Renewed focus on companies with strong growth prospects. Tick, Equinox in a big way. Generalists are going to start to come into companies like us that have not been invested in for a long time. And of course, with losing Brazil, which is a relatively high cost set of assets, adding Valentine And Greenstone, lower cash costs than anything else. Our costs are coming down significantly, and I think we're going to have a pretty happy year this year in that overall macro environment. And so, just summing up here, solidified us as a major Americas-focused gold company. It's great new production growth coming with expansion beyond what we've already got ahead of us. All the things that brings: cash flow, lower cost, stronger balance sheet, less debt, hopefully a return to shareholders ASAP, and this great leverage to higher gold prices and all that stuff. I mean, it's really setting itself up for a pretty nice year. Our targets: obviously get Greenstone up to design capacity, get Valentine up to design capacity, steady operations at Nicaragua and Mesquite, tons of exploration. You're bound to discover something new when you do all this work, putting holes in the ground. Great growth pipeline I've talked about. Brazil, we're going to take the $1 billion that we should get end of January. No pressure. Looking good? Okay, Daniela's been quarterbacking the CMOC deal, selling Brazil. Thank you for that, Daniela. Which is much, I want to compliment her on her just the work, because it was a serious grind. I was able to see that many nights of grinding away with CMOC, and got to the finish line. So that'll happen in end of January, and it'll knock out about $800 million of our debt. The rest, I'm sure, we're going to get from positive cash flow this year. And again, our real target is to outperform. So mission one: build a big company, multiple assets, diverse locations, strong operating team. Tick. Mission number two: top quartile gold producer. That's where we're going now. That's what Darren is pushing, and that's what I hope a year from now, 2 years from now, we'll achieve, and we'll be in that same outperforming category that Alamos has enjoyed, Lundin Gold has enjoyed, Agnico Eagle has enjoyed. Last slide here: we have optimized our portfolio and should perform well in 2026 if gold prices are flat or even decline, and very well if gold prices tend higher. So that's our story. Thank you very much for coming, and I'm absolutely happy to answer questions if you have any. No, we've got enough internal growth. Actually, I should, if you remember, I said exactly the same thing last year. I said we're full. We've got all this growth. We've got Mexico, we've got California, we've got Brazil growth, we've got growth everywhere. We've got growth at Greenstone, and then a month later we went out and did our deal with Calibre. So never say never, but I can tell you right now there is nothing, zero, on our plate on the M&A front, and we are not planning anything for the year. If we did anything, it would be opportunistic. It would be because we really truly believed it had phenomenal value, the way we did with Calibre, which has been proven out pretty well as the right deal. I definitely would take back our deal to buy Leagold if I had to, but I obviously can't do that. But certainly the Calibre deal was a good one, and Premier deal was a good one. Nothing on our plate. We are focused on developing our internal growth. It's going to take a lot of money, a lot of effort, a lot of engineering, and that's our focus right now. We do have Versamet. That's a non-core asset. We are locked up right now. There's nothing going to happen anytime soon. But if we had a bid on that was good for the company, if Versamet came to us saying, "I've got a shareholder who really wants the stock," we would probably offer some of it up. That's non-core, and that'll go down to pay down debt further. That's pretty well advice. You probably didn't hear that, but she said, "What if somebody wants to buy Equinox?" Yeah, I'm not a seller. I mean, personally, this is a company for me. It's a legacy company. It's my last company. I'm not trying to sell it. I just want to make that clear. We are not trying to sell. We have always been trying to build ourselves. One of the reasons we started Equinox is I was really a believer in gold. B, I thought we could do this quickly, which we've done. And it's very fun building these companies. It really fun when you start with nothing and you build a real big company. With Equinox has 16,000 employees last year, and I just got tremendous joy out of meeting a lot of those people in the communities and seeing the wealth you generate, what good it does to communities. I just love that. It's just, and of course, when a stock price goes up, you're making a lot of shareholders' money. I love that too. So I don't personally need money. Like, it's not something that drives me. It's just the joy of building a big enterprise from nothing. And you lose that when you sell it. So I guess my model again is Pan American Silver. I'm so happy that's still a big producer now, one of the top companies in Canada. And I would really love Equinox to be in that category in due course. I was so affronted when Goldcorp was sold to Newmont back in 2016 at the bottom of the market. I just said, you know what, let's see if we can build another Goldcorp. And Canadian-based, Vancouver head office, we're doing that. The question was, Castle Mountain, assuming we can actually get it built as soon as we get the record of decision, and of course it is California, there is litigation, there is who knows what will come out of the woodwork. We don't think we're going to get any. We didn't get any in phase one. But if all goes well, in a perfect world, 2026 is permitting, engineering, early construction, early orders and things like that on critical path items. Construction start in 2027, completion early 2029, probably 2028, 2029, in a perfect world. If we have the happy problem of having that coming, plus Los Filos is resolved, we will have to deal with that, and we'll manage that as it comes. And that's one of the reasons we don't feel in a huge rush with Los Filos, because we have to get it right. The nice thing too about Los Filos, though, is it's built, right? We can turn it on in a day. We can literally turn it on in a day, because those heaps have been perking away for a year now, and there will be gold production coming out like immediately, because we have all the facilities there. But the new mine at Los Filos is going to be a whole different beast, and it may be a very much bigger beast. With 4,500 gold, the 15 million ounces that we have in reserves and resources was calculated at what, 1,800, 1,700, Tom? You look at it, 2,500, even 3,000. It's a whole different animal. So it's a very happy problem to have. But we're going to be juggling those two. We won't be able to build them both at the same time. We'll tackle that problem when it comes. Dave, I could give you all kinds of malarkey about the type of mining we're going to do there. It's 14 years away. It's just premature. I just don't think it's terribly helpful. All I can tell you is Greenstone will have a long life beyond the open pit. The open pit, by the way, will extend if we have current gold prices. That was probably a $2,000 pit or $1,800 pit. It's way down the road. So I just can't. There's no sense in making even a guess right now. It's just there's a big resource there, wide open. It will be mined, and it'll be a good mine for us. Well, we're actually spending money at Los Filos on engineering. We're spending money on exploration. We're spending lots of money on community services at the two communities that have supported us. And we're looking at various scenarios to even potentially just mine on those two communities if Carolina remains refractory through the year. So there's lots of money. I think our budget is 50, 60, something like that. Yeah, Danielle is nodding up and down in that range. But that covers a lot of different things, not just keeping the pumps going. Well, again, I defer to Darren and his team on all those kind of operational details. But I can tell you this, a lot of our cost in 2025 was inventorying low-grade material. So it's paid for, right? Came into our costs, but we didn't get the revenue from it. It's sitting in a big stockpile for future years. It may even be the end of the mine life. Who knows? But that is why we think in 2026, for example, our costs will shrink overall, because we won't be having that stockpile, the same size as we had this past year. We obviously wanted to feed the mill with as good grade as we could post, ramp up, but stockpile the low grade, and how that plays out, I have to defer to Darren. Sorry. Did you hear the question? Why did we sell Brazil for $1 billion when it had an NAV of $2 billion, which actually wasn't one nanos, it was consensus. It was like 25% of our net asset value was Brazil. I don't know what you carried it at, Anita, but it was a lot. Yeah. 2.5. Yeah. So why did we sell it for $1 billion? Well, and I hate selling mines. I just hate selling mines because, mines are rare. They're rare, and they always go longer than you expect them. They always create more value, but sometimes you have to. And we're in a situation now. We've got more debt than we want, so that was an easy place to help us reduce our debt. Number one. Number two, cash is more valuable in most markets than shares of companies that you sell with share consideration back. Because share consideration, sometimes you're You've got hold periods. Sometimes the stock goes down, sometimes it goes up. You just never know. There's a lot more risk taking shares. We know that because we sold shares to Bear Creek, a mine to Bear Creek, the stock crashed. We sold another bunch to another company, the stock crashed. So it's not a given if you take shares. It is a given if you take cash. We could put it immediately to pay down our debt, and that's precisely the objective that was really the driver. But more than that, we had 11 mines, right? We have Greenstone, Valentine, at Mesquite, Castle Mountain Development, Los Filos, 2 mines in Nicaragua, and we had 4 in Brazil. So that's 11 mines. Too many for a company of our size. We had an interested buyer, a kind of a soft process. The interested buyer came to the table with cash. Heavy negotiation, thanks to Daniela. We finally concluded a deal. And when you lose 4 mines of a portfolio, you lose a lot of things that are positive for your company, in that you lose the management burden of running 4 extra mines. It takes management distraction from Los Filos, from Valentine, from Greenstone. They were high effort mines. They were not very big. They were all relatively small tier 2 mines. And they were relatively high cost. And they were actually, we needed to feed them with a fair bit of capital. We had a lot of capital to go with Aurizona going underground. We had, tailings dams to build. We had pit walls to expand. We had new trucks and new fleet, big CapEx. So taking all those as a reason to sell them, that's what we did. It wasn't just simply to reduce debt. It was rationalizing the portfolio. A lot of our shareholders wanted us to do that, and they wanted us to do it for good reason. It made sense. So we did it. We don't have any current plans to divest anything else. I have burdened you with a whole afternoon of tales and dreams and hopes and promises and facts. And I think it's time to thank you once again for coming. I'll see you this time next year. As they say in my dear friends from the Ismaili community, God willing, inshallah. So thank you very much again.